Hey guys, it's Keith Allen. I'm having a little trouble with the buttons today. That's okay. Alt season hype versus reality. How to trade smarter. That's what we're going to talk about today. Hope you're having a good day. A decent start to the week. I'm just still in this moving transition mode. My studio's not set up yet. My house isn't unpacked yet, but I'm paying attention to the charts and I'm here for you. So we're going to spend a little time talking about all of the chatter. If you remember, it wasn't that long ago that everyone was saying, "Oh, it's alt season, it's alt season, and alt season," and then it never really happened, right? Well, you don't want to get caught. I hope you didn't get caught then, and I hope you don't jump the gun and get caught now, because we are indeed seeing some signs that I would say indicate that we are seeing some of the kind of dynamic development in the market that leans towards a developing alt season, but nothing yet is confirmed. We're not there yet. Okay. So I'm going to show you in this analysis, I'm going to show you what points to like, hey, maybe this is developing for real. And I'm also going to show you what points to why it isn't legitimately confirmed here just yet, and what to look for, and how to mitigate some risk along the way. Because let's face it, nobody wants to get trashed here. Nobody wants to get wrecked. And if you don't know what you're doing, if you're just following the hype, I guarantee you, you might get lucky on some trades, but it's not going to be sustainable, and you're going to get beat up. So don't let that happen to you. Really, really insightful content in this video. So I encourage you to stick with me. If you're new, welcome. If you're an OG, thank you so much. I really appreciate the continued support wherever you sit, wherever you're watching around the world. I want to let you know, my name's Keith Allen. I'm a full-time trader. I'm a work-from-home dad. I'm also a co-founder at Material Indicators. We'll show you some of those tools in this process that can help you through your navigation of the market. And I also want to let you know, live chat is open. So if you've got questions, I'll do my best to answer them. If you have insights, please share them, and we'll get through this together. And maybe even if you got some coins you want me to look up, I will do that in the process. I'm just going to tell you straight up front, don't start hammering me with a barrage of shit coins, because I'm not going to pay attention to those. Okay. This is serious business. Before we dive in, you can do me the favor. I'm delivering some free content, high value content for you. You can help me out by just simply smashing some buttons. Give me the like, give me the share, drop some comments. And if you can't comment on the live chat, if you comment on Twitter or X or wherever you're watching, I will always come back and engage with those comments later. So by all means, please do that. And most importantly for you, hit that subscribe button so you don't miss any of the future streams and any of the insights that I share with you on the regular. Okay. So let's go ahead and start sharing charts. And the first one I'm going to share is the one that I've made as my beautiful background, since in reality, my background is stark walls and boxes, since we haven't unpacked fully yet. Okay. So let's go to the share mode and find that chart that I want to share with you, which is right there. And we'll start with this one here. Okay. So this is a chart that I've developed, just a range of important things that I think give us a great view of the important factors that contribute to an alt season. Okay. One is Bitcoin dominance. That's the orange line here. And what you need to see is Bitcoin dominance rolling over. And that obviously has happened since, June, end of June, we started to see things roll over. And then we dropped below that 60% range recently. That was earlier this month. And now we're kind of still grinding our way down. And historically, alt seasons have seen Bitcoin dominance dropping well below 50%, more like the 40 to 45% range. And quite frankly, I don't know if we're going to see that in this I say new environment. It's a new environment if you're an OG and you've been in crypto for more than 5 years. Uh, Hard to say 5 years is OG, but many of us have been in it for a lot longer than that. But I would say if you were here through previous cycles and saw we're part of the alt season back in 2021, then this version might look different to you or different to all of us, because we have so much institutional demand at this point that I don't know if Bitcoin dominance will ever really drop that low. It could, certainly could. I could be wrong. I'm happy to own that if I am. But I mean, there's been so much strength and resilience out of Bitcoin that I will be surprised if we see a 40% drop as low as 40%. Maybe we crack below 50. It's possible, but below 40, but down to 40 seems extreme. But anything is possible in this game. It is still a wild, wild west. Okay. Now, what is important here is not just that we see this decline in Bitcoin dominance, but let's take a look at what's happening structurally with Bitcoin dominance. Okay. Looky. We're actually seeing a breakdown in the structure, which could, of course, lead to more downside on the Bitcoin dominance and lead to more upside on alts and ETH, of course, right? So the second element of this is ETH dominance, which ETH has been rip-roaring since April. I mean, just a tremendous move. We see that rolling off just a little bit today after a strong pump. ETH and Bitcoin have both hit all-time highs recently. We pulled back from that, and that is a reason to be paying attention to alts. As you can see, Total 3 ES is the top 100 coins by market cap, excluding Bitcoin, excluding ETH, and excluding stable coins. So down here we have the green line, and it's a short one because I switched from the original USDT dominance to stablecoin dominance. Okay, so this is not just USDT; it's also USDC, and this is a recent metric from TradingView, which is why I don't have a lot of history on it. But what matters is what's happening now, right? And what's happening now is stablecoin dominance is holding on. It's holding on strong, but and actually making some higher highs in the course of the past 3 weeks. But at the moment, it is again trending downward. And where's this going? Proportionately, it's going right into these alts, top 100 by market cap, excluding Bitcoin, ETH, and stablecoins. And so again, this is something that we want to pay very, very close attention to. Another chart we should be paying close attention to is the ETH Bitcoin chart. And this, in my opinion, is very, very critical. This is where a lot of people are going to get caught. ETH has been running big, right? We know this. ETH has been having just a hell of a run since April. We had this consolidation down here in April and May, a big upside breakout through the key moving averages, at least 3 of them, and then more consolidation, a little bit of a dip down to prior support, and then a breakout of this structure. And this is a structure since about a 1-year-old structure. Okay. But that's not, in my opinion, the macro. A more macro structure takes us back as far as September 2022. And we can see that we are on the cusp of breakout, but there's already been one rejection. So the mistake that people are going to make, or may have already made, is they're viewing this as the sole breakout. And it really is not at this point. We have there's strength here. The fact that we see this upside strength above the 21-day moving average, huge. The fact that we see an RS flip with a retest on a prior consolidation level, very important, right? It adds integrity to that RS flip. And this is a big one, right? This goes way back to 2016. This level, okay? So this is huge. These are positives. But this is really the last element here in terms of just straight TA on trend. And this is, in my opinion, what would be considered a breakout above this. So we want to see candle closes above this line. Now we can add some additional risk mitigation in there by looking at timescape levels. And as you can see, we have a lot going on here. This rejection happened at the trend line, but look where things are really consolidating. They're consolidating back at a 2024 timescape level. And ones that we want to also pay close attention to are this year. And the fact that we're above this year, very, very good. We need to break this. And then, sure, there's other timescape levels here, but in my opinion, they don't carry the same weight as what is below, as the yearly open, and as what is happening at or below this trend line. Once we break out, there will be areas of friction here, especially up in this range where we have so much confluence, so many different timescape levels, and that's what you get on a dyno coin, right? Like ETH, it's been around for a long time. We see, two of these timescape levels every quarter. So there's a lot of them here, and where they are concentrated the most will strengthen resistance or support in that area. So I do expect to see some friction in this range, and certainly expect to see friction in this range. But in terms of where I would be comfortable acting on a potential altcoin season looking good, this is one element I'm looking for. I want to see price close above this trend line, and that would fit nicely along with the decline in Bitcoin dominance. And we would want to see a continued decline in stablecoin dominance. So those factors are all kind of coming into play. Hey, Wakas, good to see you here, my friend. Appreciate the kind words and glad to have you back, man. So let's look at some other things here, right? We talked about ETH outperforming Bitcoin. We talked about stablecoin dominance. We talked about that total 3 ES. So how do you avoid those premature entries? This is exactly what I'm talking about here, right? So this is kind of on the macro scale here for the environment of really the whole market. But you also want to look at these things on each coin that you're considering. Don't just ape into stables on somebody else's narrative. Look for those setups, and whatever the coin is for you. And we can look at a couple, we can look at different ones. I'll show you some. And if you have something that you want me to take a peek at, within reason, I'll do that for you in the live stream. So here's Solana, obviously a very popular coin, right? And one that has been doing well here lately, and one that is forecasted to do well and have, already has an ETF, and is expected to be integrated into more. So look what's happening with Solana. Solana has broken structural resistance quite some time ago, right? And started building on that. Let me turn off trend precognition just to clean up some of the noise in the chart here. We're obviously coming off of a good signal, but we can see that the key moving averages have unwound. The 21, the green 21, the red 50, the blue 100, the purple 200 moving average, looking good here in this time frame on the daily. But where are we running into resistance? Looky, my friends. It is annual, the yearly open, first week of the yearly open, forming resistance right now. And we've had a few tests of this, and it's holding right now. So we need to see a break above that. And once we have that, then we have serious upside potential for Solana, which obviously has a high back in January around 295. And let's let's zoom out a little bit and see if we can identify where price could go from here. And so this could be a moonshot coin. It's one that I would consider a quality coin versus a meme or just random shit coin. Lots of liquidity in this, and this is another way that you want to manage your risk. Okay, if you're getting into some of the smaller coins, and there may be huge upside potential on some of those smaller coins, and even the young ones, even especially the young ones. But the problem is they are illiquid. Many of them are illiquid. So you get these big moves because there's not a lot of liquidity in that order book to hold price in place. So if that's the situation, you don't want to put a big position. You don't want to throw a big fat stack of capital at it, because when you go to close that trade, you're going to have so much slippage that it's going to dump. Or when you open that trade, you're going to have so much slippage that price is going to skyrocket. You're not going to get a great entry. And obviously on a limit order, you'll do fine. But if you market order your way in, you're not going to get a good entry. And on the way out, if you market order out, you're going to have a lot of slippage, and that's not going to be good for you either. So be mindful of that. This is a coin with lots of liquidity, and you see it happening on volume. This is a good position, but from here, I would not. And I'm personally in Solana for a long time, and that is just staking and doing what it needs to do. I'm happy with my position. I'm personally not adding to my position just because of my portfolio weight. But if I were to be adding to my position, or to be starting a new one for that matter, I would look for two things. To the upside, I would want to see a break above, with a candle close above this timescape level, which is currently sitting at that's the first week of the year open at around $213. Don't take it just on a wick, because we have a lot of wicks, a lot of fake outs in this game. So be mindful of that. Look for a candle close. Yes, you might miss a little bit of the upside, but there's so much potential upside out of this move. If we just, and when you get to all-time highs, by the way, you go into price discovery mode. So let's look just to get back to the high from here, from a breakout, just to get back to the high would be a 38% trade. That's a fantastic trade. If you're ambitious and you go, well, I want 50%, or I want 100%, I want a 10x trade. Hey, you might get it, you might not, but you can't bank on those. And so you need to be taking profits along the way so that you can lock in some profits. And so this would be a target I'd be evaluating what the market looked like and what the order book looked like if price made it back up to the all-time high. Once you have that breakout, I personally like to use fib extensions to identify some potential targets. And so I'll do from the high to the swing low, and then I'll look at those fib extensions, which would put a 1.618 at around $418, and a 2.618 around $613. I mean, these are all, in my opinion, legitimate targets. Getting to that 1.618 would be a 96% move. Asking or expecting more than that out of this cycle is maybe a little greedy, but hey, you do you. That's my take on it. Alexander is asking, what about Ethena, ENA? I don't know. I haven't looked at it. Let's take a peek and see what it looks like. ENA. Okay, so we can see that this coin is relatively young, born in April 2024. Wait a minute. Okay, so they were smart enough at least not to launch on April 1st and be an April Fool. So they waited till April 2nd. So I'll give them that. And price spiked, as often does, and then price dumped, as often does with new coins. Made it back up, double topped, broke down, and now a recovery from the bottom, which was this is interesting. It came down to a prior, not all the way down to the total, to the lowest low. So it did make a higher low in terms of the macro view of this. But it was right in that consolidation range, which is valuable to me. That's important. And so this looks like a solid bounce from here. And as you can see, it's climbed out, and now all of the key moving averages are unwound here on the daily time frame. On the weekly, it also well, it doesn't have a 100 and a 200 week moving average yet because it's too young. But we could be getting another support test. You see things breaking down here on the weekly time frame where it could go back and support test. I like the fact that we see this confluence between this Q3 2024 timescape level and the 50-week moving average. This is interesting to me. That's an interesting target in my opinion. Now, if we go back to the daily, we can see that price obviously lost the 21-day moving average, and so ranging between the 50 and the 21, it's kind of, in my opinion, a no trade zone until we see a break above the 21. In terms of maximum risk mitigation, you know, if you wait until we break above these to enter, then you're going to miss a lot of upside. So what I like to do is not open all at once. Okay. Maybe if you get a support test down here, and maybe it stops here at the 50, maybe it stops here at here at these timescape levels. Maybe it goes all the way down here. Who knows? Wherever you find support, then maybe if you haven't opened a position or you want to add a position, then you add at support levels. And then if you wanted to add to that again, then you add another bit here and another bit here. And this way you're dollar cost averaging your way in. And if you really have conviction on this coin, right? And this comes down to what is your conviction on these trades? Is this something you're holding, or you're just trying to get that scalp or that swing trade on? And so let's say we got the support test back down to somewhere in this range, right? Let's go to the timescape level. Let's say we got the support test. You would have, that's a huge trade, 70% just to get back to the yearly open. And I'd be very, very happy with that. I would certainly be taking some profits here. And then if price moved on, well, guess what? I would do the same thing here. I'd take a little profit here. And 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 if somebody faulted me for taking profit after 136% upside because there's more to go, well, you do you, I'll do me. Because I don't have any conviction on this coin. This is the first time I've ever even looked at it. So in terms of just the technical analysis in the trade, there's great upside potential here. And then obviously if we break above this yearly open level, then you have sheer price discovery to the upside here. And again, I would use a fib retracement and say that we went from a level of like here to here, and that puts you at about $1.95, potentially a $3 level if things really got crazy. So I'd be okay, in terms of, hey, if I started taking profits here, and then there was this breakout, would I be screwed? No, because typically when you get to these levels, you see at least a brief pullback instead of just a straight rip through. The straight rips tend to retrace at some point. So I would look to add to my position with another entry here, and then I see great potential upside, even if it was just from here, even if it was just from the breakout to the first fib extension. That's another 55%. So there's there's a lot of upside potential on this coin. But again, I would be waiting because we see a pullback. I would wait at the very least for a support test down here to add to my position or a break above the 21-day moving average with a close above the 21-day moving average to add here and take advantage of this move. Okay, so then you take advantage of this move and potentially, you could get anywhere from 30% to 77% to 175% out of that trade or higher. Of course, it can also do this at any time. So be mindful of your position sizes, especially on coins that do not have a great deal of liquidity, and that can help you protect some risk. The market cap of USDE is growing a lot. And what do you attribute that to, Alex? I'll be honest, I've been a little bit removed for the past 2 weeks because I've been involved in some other personal stuff and haven't been watching that closely. So by all means, please share some insight on that. So what else? We talked about scaling in. We talked about being mindful of those illiquid coins that can really be dangerous for you. And so you want to be selective, right? Be selective about the coins that you are going to trade in this, and you should do well. What you want to be sure that you do is avoid the emotional trade, avoid the FOMO, avoid aping into something just because somebody said. If you don't understand why some talking head or anonymous person on social media says that you should take a trade, if you don't understand the principles behind that trade, don't take it. You got to know what you're getting into. Listen, there are some people. I have been trading since 2017 crypto, and I have been to the school of hard knocks many, many times. And along the way, I found some fantastic traders and made some friends with people I trust, people who have made multi-millions trading. Okay, fantastic professional full-time traders. And guess what? Nobody gets it right 100% of the time. So in the beginning, when I didn't really know what I was doing, yes, I would follow. And sometimes I would do great, and sometimes I would do not so great. And over the years, there have been individuals, as I said, who I respect as traders and are friends, but had completely different perspectives of what the market was going to do than I do. And it wasn't a point of contention. It was, it always, when you hear different perspectives, I think it's important to have them. And I think it's important to pause, assess what you're looking at, and make sure you're not missing anything. So I value those opposing viewpoints 100%. But at the end of the day, I trade on my decisions and my perspective, not anybody else's. And you should too. Okay. That's why I don't tell you what to trade or when to trade or what price to buy anything. I want to teach you how to identify these things. I want to show you, it's that teach a man to fish principle. Give a man to fish, you feed him for a day. You teach a man to fish, you feed him for life. And that's what I'm trying to do. I hope you guys appreciate that. And at the end of the day, these streams are for you. So if you want to see something different, by all means, please share it. In fact, like today, I had a couple of ideas of what I wanted to talk about today. One was alt season, and one is what's happening with Bitcoin and ETH. And I chose to go this route, but maybe I should start polling you guys on what you want to hear about. and then we can tailor this to you as well. So Alex, what Alex is, I think these two are in the same ecosystem. Um, so I guess, are you talking about um, the what you call it, USDE? And well, gosh, that's what I learned from you, and thanks a lot. Yeah, man, I appreciate that. Nothing makes me happier. Nothing makes me feel better about what I do than hearing you guys, give me feedback that I've helped you in some small way. Because when I first started, I had just enough knowledge to be dangerous, and I lost a lot of money. Fortunately, I've made that back and then some, by many multiples, since then, but it's taken a long time. And the thing that I've probably, uh, gained the most from was learning to discipline myself, not to, trade on emotion, not to, allow myself to FOMO, not to, and then the big one is not to overtrade. The past couple of weeks, like I said, I've been engaged in some personal stuff, including a full pack up and move of my family home, and uh, that forced some patience and discipline because I didn't have the time or focus to look at the screens. So I let my trades, mature as they did, um, and as they continue to do. That means riding through some dips, and I'm okay with that. And the reason I'm okay with that is because I have conviction in my long term view of what those trades are going to do. So, um, trading, investing for the longer term is much different than day trading. And if you are new to day trading, I would encourage you to just slow your roll and start small, trade small, and paper trade to hone your craft, and maybe start taking small, taking real trades to gain your confidence, but to go slow and to know what you're getting into. If you're going to do that, don't be trading anybody else's narrative than your own. Simple as that. Just looking through comments, I think we covered them all, and I am grateful for your guys' continued support. So now at this point, what should you be doing right now? It's really simple. One, we've covered all these things. I'm just going to recap. One, be selective. Don't ape into every coin. Go with the coins that have strong narratives. Obviously, RWAs and A1s and ETH related stuff is pretty hot right now. Wait for that structure. Wait, be patient. Wait for these structural moves that we're talking about. Okay, let's look at it while I'm chatting about it. Let's just look. I'm hearing chatter about Doge. You always hear chatter about Doge. I have a love-hate relationship with Doge, but now I'm hearing chatter that there might be a Doge freaking ETF. What value Doge brings to the world at this point, not quite sure. I think the answer is still none, other than entertainment. But look where Doge sits right now. We have a break of the structure. We, however, sit well below the yearly open, which shows us some upside potential, a great deal of upside potential, but we currently sit pinned under key moving averages, right? So we just tested the structure, had a structural support test, one, two of them, actually several of them. Look at this. Broke down, failed to reclaim it, touched it, tested it, fake out, tested again yesterday. So now we need to see a break above these, both the 50 and the 21 moving average. Once we see a break above the 21 moving average, then you have potential upside that could take you. Obviously, the next timescape level could bring in some resistance. The fibs could obviously come into play here, and then I think you'll find more friction up around the yearly open, which has confluence with the 0.5 fib. That's still a 36% trade. rock freaking solid in my opinion. And then we have the second timescape level up here between the 0.618 and 786 fib. So this range, there could be a lot of friction in here before getting back to the high. But in any case, that could be anywhere from a 16% trade to a 36% trade, 53%, 80%, 115%, or much higher, much higher. So you mitigate some risk by waiting for these breakouts, confirmed breakouts. And so you could say to me, well, if I wait for that, then I'm going to miss out on some upside. Yeah, you will, but you're going to do it at the value you gain is you're going to mitigate risk. So I'm okay sacrificing a little bit of meat off the bone on a potentially 200% trade. I got no problem. If that only turned into 170%, I'd still be fine with it. So you do you, I'll do me. Not going to tell you how to trade it, just telling you how I trade it. Simple as that. And we be very mindful of that ETH breakout that we talked about, the Bitcoin ETH trade. And ultimately, if you keep an eye, so you want to see this breakout happen, and ultimately, if you keep an eye on this chart, which you can create for yourself, I post it pretty regularly, but if you keep an eye on this chart, I've layered Bitcoin dominance, ETH dominance, total 3 ES, and stablecoin dominance into one chart, so I can see the dynamic really changes between these elements. And this will give you, in my opinion, a very, very good heads up of when things are moving in the direction that alt season lovers want to see. And we are just starting to see that. Okay. This can change. This can revert in an instant, as it has many, many times. Look at the fake outs, right? Oh, it was going down. And then guess what? It made a high. Oh, it's going down. Then it went up. And then we got a big dump. Then we had a recovery. So there are no straight lines, at least not sustainable ones. So just be mindful of what's happening. And just like any other asset that you're trading, the technical analysis works here as well. Look, there's a double bottom on stablecoin dominance down here. And so if we see it break down, will it stop here or will it go lower? Those are the things you want to watch. Hope that has been insightful for you. It's been fun for me. Appreciate the engagement and the follows, guys. Again, if you haven't done so yet, smash some buttons, especially that subscribe so you don't miss any of my future streams and the insights that I share. And if you're having any trouble figuring out where to make those entries, then you can set thresholds of saying like, hey, I don't want to take that entry until I see a break of the structure or a break of the 21 moving average. And then you use a mean reversion indicator to find those picture perfect entries. Okay. And like this. So if you want some insight on these tools, you can, of course, find them. I've got links in the description, or you just head over to materialindicators.com. Hope it's been insightful. It's been fun. Thanks, guys. We will do it again later on in the week. I'll keep an eye on what's happening and do my best to keep you guys informed along the way. Here's to trading smarter.